All right. Well, I mean, Kaylee, I guess we can get started, right?
All right.
Yeah.
All right. Well, me and Adam will do just, kick this off and then we'll kick it right over to you guys. But everyone, thank you so much for coming tonight to this. This is something that we've been hitting on for the last few weeks on how important, you have your taxes are and how serious we have to take them. So Kaylee and Andre were generous enough to take some time out of their nights tonight and talk with us. And they are also our accountants for Viral Vision. So they're awesome. Adam works directly with them. Adam's had nothing but great things to say about them. So we're so thankful to them, and I hope everyone can get something out of this. Adam, do you have anything to add to that?
No, honestly, I think you hit everything there, Scotty. Like I said, Kaylee and Andre, they're absolute beasts when it comes to their craft, and they're really awesome at what they do. And so it's a pleasure to work with them, and they handle everything for Viral Vision. So without further ado, I'll let you kick it off, Kaylee.
Awesome. All right. Well, great to meet all of you. We're going to try and breeze through some slides here, give you some high-level information, but certainly want to save room at the end for kind of open forum and questions. So if you have any, as we're walking through the slides or, anything that comes up, please drop it in the chat. And we'll try and get through anything that's there, or, raise your, use a little raise hand thing at the end to speak up. I mean, whatever works. We're super informal. So with that, I'll kind of jump in here, give you a little bit of background on myself. I'm the GM here at Fiat Finance. Launched this company right at a year ago. I'm a CPA. Spent most of my career at Ernst & Young, a Big Four accounting firm, for those of you who aren't familiar with the industry. And spent most of my time working with Fortune 500 clients. Felt a strong inclination to moving into more startup and entrepreneurial space. And so I did that a few years ago. And so now I'm here with my own business, helping entrepreneurs scale and reach their goals. Andre, I'll let you give a little intro yourself.
Yeah. Hi, everyone. First of all, super excited to do this. Kayla and I have really been excited to kind of help any way we can. So I'm an accountant. I've been an accountant for the past 6 years. I mostly focus on working with startups and small business founders. That's something I've done pretty specifically for the last 4 years. I work a lot with financial statement preparation and kind of taking companies' financial data and turning it into more useful financial statements. So my background is really heavily in making financial data usable. So that's a lot of what I will touch on today, on what are kind of some best practices that you all can take home and try to incorporate a little bit. So yeah, thank you a lot. So the first thing is, why does this accounting knowledge matter? So from my perspective of cleaning up financial data, there's a lot of, here are 3 main things that you can really get out of having good accounting data and taking the time to do the organization. The first thing is cash flow control. So that kind of helps you answer the question of, how much money do I actually have and how much money will I have going forward? I would say this is kind of the most important thing to think of when you're thinking of yourself as a business is, am I making money? How much of it? And where is it going? And where is it coming from? Those are really important questions to answer, which kind of leads us to our next point, which is strategic decision making. When it comes to that, it's based on my past, what would make the most sense for me to do? What deals have been worth it? Where am I spending the time that makes the most sense? Kayla and I do this weekly, where we're discussing, hey, what we have going on, what makes the most sense? Where should we be investing time and resources? That's something everyone can take away. When you can cleanly look back and say, hey, I've made this much money doing this and that much money doing that, it really helps you decide where should you be spending your time to help grow your business. And tax optimization. Tax is a lot of what Kaylee handles. And from my view of where I see it, is you want to know exactly what money needs to be going to the government, when you need to be sending it, what can be deducted and what can't. The earlier you have that information, the better. So a lot of what we like to do with our clients is encourage quarterly tax payments, and it's us going through and establishing rules so they know exactly what will need to be sent each quarter. Some best practices. Number one, I would really hope is kind of a big takeaway for you all is separating between business and personal finances. This is something we deal with a lot working with small business owners. A lot of the people we work with are people that don't really have much of a financial background, and that's completely okay. But one of the biggest mistakes we see that they make is a lot of intertwining between what's going on personally with their finances and what's going on in the business. That makes it really difficult for a lot of reasons. First of all, being it's really hard to know how they're doing performance-wise. What is that money we spent? Was that the business, or was that me buying food for me and my family? Those are really, having to clean that up is really hard to do retrospectively. But if you can set up a practice, as in setting up a bank account that you only use for content creation and getting paid and paying things in that sense, you'll know exactly based on that bank account, how much money have I made and how much money have I spent? And then that really helps with things like taxes with taxes and decision-making. The next thing we'd like to talk about is tracking everything systematically. So what I mean by that is using real time is what we put on here, but I would say often is going and making sure you know what money has been spent and what it's for. The reason why this is important is this can be a quick thing if you're doing it monthly, but if you wait and you're doing it at the end of the year because you know your taxes are due, then it becomes a really big project and you can't really remember. Having the data in real time is also very valuable. It's really nice to know on July 15th how much money you've made so far in the year and what your financial goals are. So now you can say, hey, I'm about 30% of where I need to be. I need to start generating more content. I need to start creating more deals. Without having that information tracked systematically in real time, you're not really going to be aware and being able to make those decisions. Generating regular financial reports is very important for more structured businesses. But for the people on this call, I think it's very important for you to know, similar to what I just said, how much money have I made? What do I need to be making? Where am I losing money? Knowing the answers to those questions on a pretty consistent basis, I would say monthly, is really important for you to make your own decisions and know where you stand. So those are, I would say, the quick 3 best practices from a very high standpoint.
Oh, I lost it. Sorry. Here you go.
Managing cash flow. I would say managing cash flow is probably the most important thing for a small business or a person, an individual sole proprietor making money. Where is my money? Where is it coming from? And what do I need to spend it on? This is going to be very big for all of you because I'm assuming a lot of this is just now I have this money and what should I be doing with this? Point number 2 on here is really important. We would typically suggest reserving about 30% of this, of any money gained, to pay for taxes. Typically, that's just a good benchmark number. It might be lower. It probably will be lower taking out expenses. But if you can keep 30%, you don't want any surprises at the end of the year. That's the whole point of cash flow management, is no surprises. Do I have the money I need? Am I operating profitably? Those are the big questions we really want to be able to answer. So setting aside money, planning out bigger investments of time and resources to know when is the right time, putting big expenditures on a calendar so you know when you need money by. Those are all very important for everyone, and especially people who are kind of dipping their toes into more of a business-sided thinking. Thank you. Leveraging accounting software. So why this is important, this is a lot of what I do on a daily basis, is keeping up with software for clients or for anyone. Why this is important is it helps keep everything in one place. So before, a lot of times you'd hear about accounting and it's tracking receipts and pictures and money and receipts. That's not really how business is done anymore, because we have great software. The software is really good for things, tracking mileage, tracking receipts. Where is money coming in from? Am I sending out invoices regularly? I can now make these look exactly the same every time with my bank information. The softwares are really good for this. QuickBooks Online is the big name in the space, which I would also recommend. It's very user-friendly and easy to use, which is why I would recommend it. As far as when this makes sense, once you're finding that it's getting hard to track your money in, your money out, what's what, there's a lot of software that can really help solve this for pretty reasonable price points. So that is kind of how I would say you can leverage it when you want to keep track of what's going on.
Okay. Well, I'll take over from here. And as Andre mentioned, I handle a lot of the tax work. My career has been largely focused in tax compliance and advisory for any number size clients. But I wanted to touch specifically on, the solopreneur, the single member. Maybe you set up an LLC, but you're the sole owner of it and everything's still running through your personal 1040. Maybe you just started making money this year and you have done nothing before. So you're like, I have no idea how this information gets picked up on my tax return. So these are some high notes here. When you are making money as a business, and that is what you're doing, you are as a content creator, that is your business. Even if it's you as an individual, now your individual is a business entity, right? You will be filing what's known as a Schedule C on your 1040. That is where you report all of your business income and all of the expenses that come out of that income. In addition to income taxes, there's also something known as self-employment taxes that you will have to pay. That's 15.3% on your net earnings. That's income minus expenses. There's some additional deductions. I won't get too far in the weeds there, but it can get reduced a little bit. And just importantly to note here, there are ways to avoid self-employment taxes altogether. That's a little bit more of a technical discussion that I would be happy to have in a separate webinar about different business entities and structuring for tax optimization. You can do things like elect to be treated as an S corporation or things like that if you really get large enough where you want to be saving that money on self-employment taxes. Kind of the rough cut break-even point of making that determination is kind of when your profit is kind of somewhere between 80 and 100K in a year. So some of you might be a little far off, or some of you might be thinking I'm approaching that. So if that's the case, then absolutely very valuable to have that discussion so we can look at how you could optimize. The quarterly taxes that Andre referenced are due April, June, September, and January. We can estimate what you are expected to have for a full year and calculate your tax liability and effectively divide it by 4. And that's kind of what your payment would be each quarter. So that's why it's so important as you're making money to have a separate savings account set aside where you're reserving money to make sure you have money sitting over there so that when I come to you and I say, okay, it's September 15th, and based on the information you provided to me, it looks like your tax payment is going to be $5,000. The last thing you want to happen is for you to say, well, I just used my last $5,000 on a vacation because I thought it was my money. If you haven't been sending money back from tax, it can happen. So that's why it's something very important to point out to make that tax reserve. Let's see here. Maximizing tax deductions. Okay. Importantly, a couple of questions came in on the form on what can I deduct. Also, a couple questions came in on, am I going to get in trouble if I don't file taxes? Yes, you have to file taxes. And because you're not an employee, some of you might be familiar with the concept of receiving a W-2 from being an employee, and that basically your paychecks through the year came into you net of tax withholding, right? And so you didn't have to worry about putting money back from taxes. It doesn't work like that quite anymore because you're a business owner. So you are going to have to reserve money back, but you also get to deduct business expenses. Home office, for example, lots of deductions to be had when you're treating your home as your main place of business. Software subscriptions. Are you using video editing apps? Are you getting computer equipment that's has upgraded RAM, whatever you need, because you're doing a lot of video editing work, right? Ring lights, deductible. Okay. New phones. You're using your phone, all the time for your business. That's a business asset. It's deductible. So things like that are so valuable to be keeping track of so that we can be properly analyzing how we can further reduce your taxable income. So just because you might have received $30,000 from TikTok, maybe you spent $15,000 on all these expenses that I just described. So now your taxable income isn't 30, it's 30 minus 15, right? So that's why it's important to keep track of these expenses in a cohesive manner so you know how we can reduce your taxable income. Retirement savings, critically important for you all as entrepreneurs to be thinking about this. You probably as an employee somewhere, and maybe you are an employee in your day job, you maybe have access to a 401k. If you are a full-time content creator, you don't have anyone forcing you into retirement savings, but you do have a lot of availability to optimize how much money you're putting into retirement accounts, and that is going to reduce your taxable income. A huge opportunity here for you to say, hey, I make money in my day job, so anything I make from TikTok, I really just want to increase my investments. Great. So let's set up a SEP IRA for you, or let's set up a solo 401k. Let's talk through what that looks like, because if you set up one of these vehicles and you're saying, hey, I don't need this TikTok money, I'm doing this on the side for now, I just want to push all of this into investments until, a couple of years from now, whatever the case might be. Let's talk about how we can use these vehicles to basically wipe out your taxable income to zero, because there's possibilities there. Okay. Retirement savings is critically important, and it's a very large tool that you can use to optimize your tax strategy on reducing your tax liability. And really hyper fixating here on the maximizing tax deductions. Here's some high level information. Home office deduction. Okay. You can deduct part of your rent, your utilities, your maintenance, Wi-Fi, all of these things that you're paying for. If you own your own home, you can deduct pieces of your mortgage interest, and you can depreciate your home. We can find lots of ways to deduct that home office out of your taxable income. Business equipment, like I mentioned, and then professional development. You enroll in a course somewhere to, focused on your brand or focused on content creation, deduct it. It's a deduction. Do you travel for your content? Are you a travel vlogger potentially? That trip that you took, that you've created a ton of videos out of, part of it might have been personal, and let's keep that in mind as well. But part of it's deductible as a business expense because you use that trip to generate income. Okay. So you go somewhere on a trip and you vlog about it. There's a world in which that airfare and hotel, we're going to find a way to get some deductions out of that. Okay. That was very high level. I really wanted to make sure to leave room at the end for open forum questions. But the big takeaways here, making sure you're planning to set money aside for future taxes, making sure you're organizing the expenses that to make your money, you're having to spend money somewhere, tracking those expenses so you can reduce your taxable income, super important. Some of you might be paying maybe some contractors, maybe you're using some photographers, or maybe you're using some film crews potentially, maybe you're using some actors potentially in some of your content, and you're having to pay them for their time and efforts, all deductible. Okay. So that's why it's just critically important to track those business expenses, and it becomes very useful to use a tool like QuickBooks Online to do so. Tracking. So let's jump into the questions. And so I just had one come in and said, what can I use to organize all the receipts and stuff for my tax reduction? Okay. So that goes back to really leveraging a tool like QuickBooks Online. You can link it directly to your bank account. If you have a separate business bank account, separate business credit card, you can link it right in, and everything loads in there, and we can track it and map it where it needs to be. If it's travel, we'll map it as travel. If it's software subscriptions, we'll map it as that. If you think I'm really not that big yet, I don't really want to get involved in an accounting tool, then at least be pulling your bank statements. You can pull them as a Excel file, use a spreadsheet, and just kind of say, hey, here's money coming in, and these are business expenses, and you can make notes out to the side and track it that way. I know lots of people that just use a simple spreadsheet to track their income and expenses, and that works just fine. Tracking receipts. You could probably just set up a folder on your computer, and just as receipts come in through your email, you could just print them, save them to that folder for now. But using a tool like QuickBooks Online really removes a lot of that requirement. What else?
I had one.
Go for it, Justin. Yeah.
Since I know TikTok takes their percentage off the top in regards to like anything you receive in your lives or gifts or anything of that nature, I'm assuming that's automatically when that comes to our reporting, we're only taxed on our portion that TikTok paid to us, and that's all handled, or are we supposed to be keeping track of like the full value and handling the TikTok side as well?
You could do it two different ways. So, if TikTok is doing it off the top, so whatever gets deposited into your account is net of their take, then I would probably start there at considering that your income. You're not going to have to pay income on the amount gross of their take, right?
Right.
But another way to do it would be if you wanted kind of a full picture of like, what am I totally making and how much is TikTok taking out of it? Then what you could do is establish a process of tracking that gross income amount, and then an expense line would be TikTok's percentage, and you would include it as an expense line in your tracking. And that way you could maybe more properly evaluating what's TikTok's take in all of this? Like, how much of my money are they taking? You can maybe evaluate that in terms of like what you're participating in lives, or, you know, different events or things like that maybe might be more profitable. Does that make sense?
Yeah.
Yeah. But in short answer, you would not be taxed on the gross. You would be taxed on the net.
Yeah, because I assume because the percentage they take is different weekly depending on how you perform and meeting certain criteria. So that's why didn't know if that was within our responsibility to track like weekly what they're.
I would not
Okay.
consider that your responsibility. I would personally, just because, you know, we can kind of geek out on this and we can look at data analysis and all this stuff all day. I think Andre and I both would lean into, I want to understand kind of the ebbs and flows of the percentages. But the short answer for you, what you are most concerned about is what's considered your income is net of what TikTok retains.
What's not going to come back and bite me in the butt if I'm not tracking it, basically.
Right. What else? Who else?
I did have another question. Is there any way that we can like save this presentation for like future reference?
Yes. So I mentioned that to Adam before we kicked off here. I'm going to download this as like a PDF, and I will get an email out. I'll send it over to Adam tomorrow, and it'll include the presentation and our contact information and just any additional questions that might come up from a future review. We'd be happy to answer for you.
Okay, awesome. Thank you.
I have a question, Kaylee.
Sure.
As a creator, how much money or percentage should we be setting aside for our taxes?
So it is a little bit of a nuanced answer because I know that not everyone's, you know, personal income levels are the same, but I would say in general, somewhere between 25 and 30% as a reserve is probably a good like reserve account, to just have a savings account. And if you get it $5,000, let's use 10,000 because I can't do math right now. You get $10,000 in, take 2,500 and put it in the savings account. You can call it your tax reserve, call it whatever. I'm not necessarily saying that's what you will have to pay in taxes. It's very likely you'll pay less than 25%. Okay. But I think the important part here is making sure you establish some sort of process to just be keeping money aside and not seeing $10,000 in your bank account and taking it down to zero. So I would say, as a general rule of thumb, aim for 25 to 30. And as you work on some quarterly estimates, as you might start to understand a little bit better about, hey, I really think actually I'm tracking closer to 20%. Okay, then adjust, and you can adjust down your reserve. But as a starting point, I think aim for that 25 to 30%.
Yeah. Thank you so much. Anybody else? Any other questions?
I just have a question real quick. So about the traveling expenses and stuff like that, I can literally just track like flight, hotel, anything I bought, just mark it down with the price and say, hey, I spent this is what I did for content. And that's like good enough. Like that's all the information that I need.
So we would probably, that'd be an area where I'd encourage you to be working with, you know, an expert, a CPA or otherwise. We'd be happy to evaluate and have a longer call with you as well. because if travel is business and personal, it starts to get a little nuanced. There needs to be some sort of split between, hey, how much of this trip are we considering business versus personal? There's all kinds of evaluations to be done. But the short answer to your question is, if you are taking a trip and you know you're going to be creating content on that trip, then yes, you book a flight, you're going to get a receipt for booking that flight, right? It's probably coming to your email.
Yep.
Print that email, save it in a folder, call it, like business, create a folder called Business Expenses 2025 and, drop it in there as, flight to Florida, July 2025, whatever. And just keep all of the hotel receipt the same way. Just print the email, save it in that folder, and we can go through and evaluate and talk through what is travel for business versus personal. It does get a little, it does get a little nuanced, especially because I know that, obviously, like, if I go on a trip to visit a client, that's purely business. I have no reason to travel other than seeing that client, right? But if you're traveling to see a new country and to have a vacation, but you're going to be creating content while you do so, that's where we would need to come up with some sort of appropriate percentage for what's considered business versus personal. Does that make sense?
Perfect. Thank you so much. Yes, that makes perfect sense. I appreciate it.
You're very welcome. Great name, by the way.
Thank you.
What else?
Anyone got any final questions before we wrap it up here?
In regards to what your recommendations would be, do you recommend doing something like leaving it under your personal social, or do you recommend doing some kind of like a sole proprietorship or something on the side where, I know you said like keeping it separate, but is just keeping it in another account enough to keep it that way? Or is it better to have its own, full like tax ID number and everything like that?
So, that's a really important question, honestly. I think that for many of you, if you are just getting started, it probably is fine for now just to keep it under your individual name. If your goals of this business is to make this a viable, profitable, full-time operation, then I think the sooner you can create some security and some personal liability protection. This is critically important. As you are, creating content, you're not really exposed to like negligence claims or anything like that, the way I might be in my business, but I am protected personally by having my business set up as an LLC. It's a limited liability company, right? And it does create some separation from my personal finances and the business. And if somebody was to come after the business for any reason whatsoever, they can't filter down to me personally and sue me personally, right? So creating that level of protection, if you really are going to pursue this full time and generate significant amounts of money, I think it's critically important to go ahead and make that decision to create an LLC as a baseline. It's very straightforward. You can do it online, and you can create the LLC and get an EIN. That is a business equivalent of a social security number. That can also be done online instantaneously. You can get a number given to you, and that's your business ID. It makes it very easy to create business bank accounts and to apply for business credit cards as well. So I would say the long and short of it is, for many of you, it probably isn't necessary, but long term, the sooner you do it and just go ahead and create that kind of division of church and state, probably the better. Does that make sense? It also, this will be my final thing. I know we're even over time, and thanks guys for hanging on with me here. Creating a separate business entity does make some of those, I know kind of earlier in the presentation, I referred to those kind of tax optimization strategies, depending on business entity. It does give you the opportunity to pursue some of those strategies if you have a business entity set up. There's a few more of those available to you if you are an actual business entity versus an individual. Okay. Well, this has been great. Thank you all for participating. Adam, thank you for inviting us on. This has been a lot of fun. I would love to do more if you'd have us. But in the meantime, We're going to circulate this presentation. Adam has recorded this, so I think he's going to circulate the presentation as well. And our contact information is in here. And if you have any thoughts, questions, concerns that maybe you didn't want to bring up in front of the group, or you'd like to talk privately, please let us know. And consultations are free, and we'd be happy to set some time and talk to you and see what makes sense. It's very difficult, I think, sometimes when you're just starting to make money to feel like, well, I don't really want to pick up another thing I'm spending money on. But taking care of your finances and making sure somebody who knows what they're doing is has everything under control is usually worth the cost. And we do have some preferential rates for early stage businesses, and we can walk through that as well if that's something that anyone would be interested in pursuing.
Awesome. Well, hey, Kaylee, Andre, thank you guys so much for y'all's time and taking the time to educate our creators here. I know they definitely took a lot of value out of it. And everyone else, hope you guys enjoyed the presentation. If you guys definitely enjoyed it and want some more of that, please let us know. And we can definitely set something like this up again for the future. But other than that, appreciate everyone here. Y'all have a great rest of y'all's night. And if y'all need anything, please reach out, and we'll be circulating this meeting recording out into the group chats very shortly as soon as we get it set up.
Thank you guys so much, and thank y'all for putting this up.
Thanks, everybody.
Bye, everyone.